Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Eric Jorn, a partner here at the firm. Hello, Eric.
Hey, Mark.
Question for you. How many businesses would you say, offhand, we care for that are an LLC that we service?
Well, that's a great question. Probably at this point, 60 to 75% of clients or small businesses that we service are LLCs.
Okay. And do you think they should all be LLCs?
From a legal organization standpoint, oftentimes the LLC makes sense. What we like about the LLC is that you have flexibility because you can be, from a tax standpoint, as an LLC, you can be whatever you want.
Okay. But also part of your onboarding process is like a discussion about it, like, hey, you're an LLC now. Should you be something else? What's your trajectory, right?
Correct. So, right, you might start as a what's called a sole member LLC, disregarded entity reported on a Schedule C for tax purposes, and you might get to a point where you're like, hey, something else makes more sense. Most common, what we see is it time to become an S-Corporation?
And where is that line in the sand?
The migration from a sole member LLC to an S-Corporation, the upside on that is income from a sole member LLC is all subject to self-employment tax, 15.2% up to, I think, about $170,000. The S-Corporation, there's a play on that where you pay yourself on a W-2, reasonable compensation, and the rest of the profit is exempt from self-employment tax. So the question of, hey, I'm a sole member LLC, and first we need to have a long-term discussion is, do we want to bring in additional partners? Is there maybe some free flowing of assets we want to have? Is there a certain type of different structuring, acquisition, fundraising, things that you want to accomplish down the road? Or do we just want to maximize cash flow to me as the sole shareholder, or maybe an equitable shareholder that you might introduce into that business? And if the answer is the latter, we're going to talk about when's the right time to be an S-Corporation. What we see with that is at what point in time are we going to have more income or profit up to the point of what reasonable compensation would be for you as the S-Corporation shareholder. To pin a dollar on that, it could be that theoretically could be anything, right? It could be as low as $40,000 a year, could be as high as $160,000 a year. However, we start having that conversation around $60,000 of profit. We start figuring out at what point in time does the extra compliance costs of being an S-Corporation, meaning I have to run payroll now and I have to file a separate entity tax return. And the record keeping component is a little bit greater being taxed as an S-Corporation. So we want to balance the cost of compliance with the tax savings that you get from making that decision.
So aside from kind of that general number on how much you're bringing in, is there something like how many employees you have that you kind of also would put in the mix?
Yeah. So think about this. One of the biggest compliance costs is running payroll.
Okay.
When you go from a sole member LLC to an S-Corp. If you already have other employees and you're running payroll, now that's no longer an incremental cost. It's something that exists. So that takes one part off the table. So now the only other additional incremental cost is the actual cost of filing an S-Corporation tax return. So now that bridge is a lot easier to cross, right? But again, we're probably going to make that decision once they hit their threshold of reasonable compensation, where it makes more sense for them to just pay that portion of the W-2 than leave it as profits. And then new profit above and beyond that now becomes flow through profit, not subject to self-employment tax. We save that 15.2%. And really that range of whatever your reasonable compensation to that $170,000 FICA limit times 15.2% is the big tax play on that.
Okay. Anything else that you would say, like, this is definitely a sign that an S-Corp is the right move?
Again, it really needs to align with what you want to be as a business, right? For a long time, there's always been the rubber stamp of S-Corp, 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 which you're probably right 90% of the time. But you need to think, you can think about today, right? Because it's the easiest way to save some money on tax. But you also need to think about 5-10 years down the road and ask yourself, do I want to bring in investors, right? Under a partnership structure where I can do things like, say, specially allocate profit between people. So my ownership doesn't necessarily dictate how much profit I have, right? So you can bring in some sweat equity partners that maybe don't bring capital, but you can reward them by the efforts they're doing. That's a big reason to do it. Maybe I have a capital intensive business where I need to move some assets in and out. Partnerships and sole member LLCs allow free flow of assets. Once you are elect as an S corporation, all those assets now, the only way they can get out of your S corporation is at fair market value, taxable event. So yeah, we take that plan of becoming an S corporation very seriously. But again, it's the right move for probably 90% of businesses out there.
Okay. Let's see here. Actually, I'll tell you this. What if someone is an S-Corp already? Let's say they did it by accident.
Yeah.
What's the play?
Oh, boy.
Where all of a sudden it's like, I did this and I think I made a mistake.
Yep. So there's really only one trick to do that. It's called an F reorganization.
I feel like F is the right letter of choice. Okay.
Yes, exactly. No, not always. Most commonly used in private equity acquisitions, but with the F reorganization, essentially you contribute your S corp to another S corp, turn it into a disregarded entity, and then now you have a non S corp entity again.
Okay.
But there's a lot of stuff around that. So that's a very complicated
and we don't need to
situation.
dig into it, but it does sound like everything that is involved with it is going to take extra steps, and that costs something, right? Like for an accounting firm to reorganize you. Exactly.
Oh, that's a legal, something like that is a very significant undertaking. We're talking $20,000 to $30,000 minimum. Wow. For a project like that. So that's what we'll see more often is somebody makes the S corp decision too late, right? We might see a Schedule C come through with $250,000 in profit, and we've paid all this excess FICA tax. Great.
So the LLC is already doing so good, it's actually overperforming for what it's
exactly right. And we'll say, okay, we've done. Usually. This is exactly how it looks, right? They made $200,000 and now they have a $50,000 tax bill, and they paid it at the end of the year, and they're frustrated because they didn't see it coming or whatever, the circumstances surrounded that were, and we'll see that. And we say, okay, we got to craft the plans. It's got to be executed correctly. So we do an S election. Here's what your reasonable compensation is, because we can go online and do using resources out there that will actually tell you what you need to pay yourself and have support to back that pay. And generally what we see is those dollar amounts can come as low as $60,000 and as high as $120,000. But that, let's just call it, there's a $50,000 gap that we can shift from income subject to self-employment to profits, and we save the 15.2% on that, which comes out to being around $8,000 just off, again, reorganizing that one piece. And that's just the self-employment tax savings.
Oh. Anything else you want to discuss about electing an S corp?
Yeah, no, a good bookkeeping will let you know during the year at what point in time does it make sense for me to go retroactively do an S corporation, right? So if you're keeping up with your bookkeeping, you know where your profit sits, you have an idea around what reasonable compensation would be for you. I think once you're around $40,000 to $60,000 of profit and you know that's going to consistently happen, that's a great time to have that conversation of, does this make sense?
And just so people are aware, what time of year? Because this isn't something that you just want to do where it carries over in the year.
Yep. So if you do this at the end of the year, it's going to cause a big headache because we're going to have to go back, or we're going to have to say, okay, you can do a retroactive S-Corp election as of 1/1 to start the year.
Yeah.
Which solves that. But then I have to catch up my W-2 compensation. Say if you did this in December, say the last payroll, right? So we might have to run you a $60,000 or $80,000 or $100,000 payroll check in the last payroll of the year. It's a little messy and squeezes cash quite a bit. So we like to usually at least have half the year to come up with a plan and to execute this. And to me, that's almost too late. I'd like to anticipate it for the new year.
Yeah, no, that sounds good. Well, and we've talked many times about having a plan, and this falls in that same category.
Yeah.
Know that you're going to be walk into the year planning to have it executed.
Yeah, exactly.
Perfect.
Cool.
Thank you, Eric.
Anytime.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.